pretty common for institutional investors. Continuing our movie theme, you may have seen the movie The Big Short by Michael Lewis. Michael Burry was among the investors that shorted mortgage-backed securities of subprime loans. And many of us on the call here have a mortgage. Envision all the students here and your mortgages over here. You can package them, and then Wall Street will kind of slice it and dice it and sell it to investors. So we put all these mortgages in a pool, and those that get paid first can be the AAA tranche. So these are called classes or tranches. And then it's sort of like a waterfall. This one is paid in full, and then you go to this one, and then at the bottom you have the unrated. And why they might do it is that they're hoping for like a 20% rate of return. Now, as long as everybody's paying their bills, it's okay. But if you hit a recession or a depression or whatever it is, then you could have large losses. But this is your traditional mortgage-backed security. Overall, it's a positive, but there can be some negatives as well. When my parents had a mortgage, they probably knew the banker. If there was a problem, they can try to work out a loan. But now your mortgage is probably packaged in some security, and you can't just walk to your banker and renegotiate it, right? It's been sliced and diced 100 ways. So overall, this securitization process has lowered mortgage rates, but it makes it a problem to work out individual loans. Now let's shift gears from real estate to commodities. Just like real estate, it might not be trivial how to define a commodity, but we're going to define it as metals, oil, gas, and food. You might remember our futures lecture where we actually talked about live cattle, which somebody can buy. I'll show you some stats. Historically, commodities are a good inflation hedge. Not always, but usually pretty good. In addition, commodities are priced in US dollars. China and Russia are trying to get away from that a little bit, but usually there's a dollar component to trading commodities that you should be aware of. Now, I'm going to talk about gold a little bit, and the easiest way to get access to gold is to buy the ETF GLD. But you can buy physical commodities. You can buy securities based on commodities. You can buy commodity stocks. Newmont Mining is a gold stock in the S&P that's trying to take somebody over today. I own a company called CF Industries that has a lot of nitrogen and potash. So you can buy commodity stocks. There's a lot of ways to play it. The most common way that professionals do it is through futures markets. These are among the large list of commodities that can be traded. You can see almost all of these have industrial uses. And we've chatted about Starbucks, for example, trading coffee futures and other things. These commodity contracts don't have to be traded on organized exchange. They can be just contracts between two parties. This is what I alluded to earlier. You're having to learn a little bit, remember your stats a little bit more tonight. We talked about the normal distribution, and you might remember R squared is a goodness of fit. This looks at the relationship between inflation, CPI, and a major commodity index, the Dow Jones UBS index. And that correlation is 82%, which is really high. So what this shows you is there's a very high correlation or a good hedge between commodities and inflation. And in fact, last year, commodity stocks, especially oil, did pretty well. This year, sort of a mixed bag, but, it just says it's a diversifier. The problem, though, is that over any 1 year period of time, there may not be very good diversification. So we're going to look at a 60-40 portfolio, stocks and bonds. And then we're going to look at that commodity index, the Dow Jones UBS index. Over a 1 year period of time, the correlation actually might be pretty high. But as you go out 5+ years, you're getting excellent diversification by putting commodities in your portfolio. So that's kind of the takeaway. Commodities are a good diversifier if you have the patience to wait 5+ years. Let's talk about gold, which is a special commodity. Number one, gold is sort of viewed as an inflation hedge. It sort of did okay last year, kind of flattish, which is, better than down 18 on the S&P. Gold is up about 8 or 9% year to date, so having a strong year this year. Gold is once tied to the money supply. I mentioned the Reserve Act of 1934 that made it illegal for individuals to take currency and cash it in for gold. And then in 1971, the US went off the gold standard, so institutions were not able to do that. But some people still like gold when the world falls apart because of that multi-decade/century history. It does have some retail value, especially in India. Gold is a big part of the culture for weddings and other things as well. It can be used as collateral. Gold, as I'll show you, does reasonably well during bear markets, not always, but the correlation's pretty low. And we see certain central banks that have positive trade flows are diversifying and buying more gold. The easiest way to get access to gold is to trade an ETF. GLD is the most popular one. There's a couple others out there. And you can trade this just like you can trade Microsoft or Coca-Cola. There's $53 billion in it. I have a little bit client money in it as a diversifier. You can also choose to trade either gold bars, which are pretty expensive, or these tiny kind of gold mini bars that are more like a square that are thin. Banks like HSBC or JP Morgan can sell you a gold certificate that you don't have to carry it around and put it in the vault. You can buy shares in mining companies. So there's GDX, which are large cap gold companies. There's NUGT for Nugget, that's smaller cap gold companies. You may have seen some Eagle coins. You can collect them and trade them and hopefully secure them in your home or in a safe. This is a really interesting chart. It's a couple of years old, but the bulk of the gold in the world is in the US, specifically in Fort Knox, Kentucky. I'm sure they're going to come out with like an Ocean's 11 movie or something where somebody's going to break in there, but it's supposedly like the most secure facility in the world. Germany, as you know, had some bouts with hyperinflation. They have a lot of gold. You can see some other countries. But this is the one on the right is also interesting. You could look at companies that have a big trade surplus, like Japan, China. They tend to recycle their balance of payments by owning US Treasury securities. But this tells me that they're probably going to want to increase their gold allocation over time. Saudi Arabia as well. But just an interesting stat, who owns the gold? Another stat that might be hard to believe that I've heard, and I think is true because I know Buffett said something similar, is that all of the gold that has ever been mined in the history of the world can fit in one Olympic-sized swimming pool or one baseball diamond. I don't know how deep that is, but I guess we sort of know how a deep Olympic-sized swimming pool is. That's kind of a mind-blowing stat, but that's why gold has some value precisely because of its scarcity. And yes, new gold is being mined, but not at a huge rate. We talked about Bitcoin the prior two classes. And one of the reasons why I think Bitcoin is not going away is because of this graph. Now, this is the money supply by a bunch of countries. We have China and Hong Kong here in the red, the US here in the blue, Euro area, Japan. In plain English, central banks around the world have been running a printing press like crazy, increasing it fivefold since the Great Recession unfolded. In contrast, Bitcoin has mined 18 to 19 million coins, and they can't mine more than 21 million. So therefore, it's increasing at a very slow rate. And people have less faith in this fiat money. So just an interesting chart on the money that has been printed. These are the definitions. We're not going to worry too much about it. M1 is a more strict measure, while M2 includes like savings accounts and other things as well. This is an interesting chart. These are down years for the S&P since the 1980s. And most of the time, gold either makes or loses a little bit money. In 1981, gold had a huge run in the 70s and early 80s, and then it came down a little bit. But this is why gold is a decent diversifier for equities. The correlation is minus 60%. And on average, when stocks lost money, gold was about flat. And that was true last year as well. So I kind of found the stat interesting. All right, so we have 2 slides left, or no, we have a few slides left, but that's the end of our discussion on alternatives. The last part is, how do you find alternatives? What are kind of things you look for? But that's the end in terms of talking about new investments. Any questions or comments on commodities or gold? All right, so you might say, yeah, I kind of buy this idea that you need to have a diversified portfolio, including alternative investments, but they're not all on Yahoo Finance. Where can I find these things? Well, yes, sure. Suleiman?
Yes, I do have just one question now. With the news of other countries using their own currencies instead of the dollars, is that going to impact the dollar value? Is it a good advice to replace dollars with gold?
Good question. I think we'll have an impact. I think the best way is to diversify. So in my Rutgers retirement plan, I have mostly international funds. Another way to play is companies that have a big international component of sales. So Caterpillar is a good example. Coca-Cola, Boeing, companies that do a lot of exporting. A weak dollar would benefit them. So it's not like the world's going to come to an end, but incrementally, China obviously wants to promote their currency, Bitcoin. So that's how I would play it. But incrementally, that's happening a little bit by bit. Thanks for the question.
Thank you.
So sourcing is the process of finding alternative investments. If you work for a company, you can subscribe to databases. They're not terribly expensive, where you can do a search on different hedge funds, private equity funds, or like a filter like I did on FinViz. You could read the popular press. That's free. I'm occasionally invited to these capital introduction meetings where a broker might say, okay, here are some of our emerging hedge fund managers. Want to hear what they have to say? If you like what they have to say, we'll set up a private meeting. You could have contacts in the industry. So it's not hard, but it's a little bit off the beaten path. And typically it takes 3 to 6 months between that first meeting and when you're actually writing a check. There's background checks, especially if you're talking about a private company. I'm not going to go over all these bullet points point by point, but there's quantitative due diligence. So, I like to see performance in both up and down markets. How do they do during times of market stress? Because you could easily, take on a lot of leverage or do other things high beta and then fall apart. I like to look at semi-correlation, which is correlation up and down markets. So you're typically doing quantitative due diligence, qualitative due diligence. What are their credentials? Did they go to a good school? Did they work at prior firms? Do they have their own investment in the fund? A lot of super rich people, they tend to do things like buy sports teams. And are they still engaged in the business after they buy those sports teams? We've talked about questions you could ask a fund manager: what's your edge? So bottom line, quantitative, qualitative due diligence. I invest, for clients. Most of the stuff we do is in-house, but about 1/3 of the money we outsource. So I meet with managers all the time. And, let's say for every 10 managers you meet with, maybe you invest in 1 or 2. You can come up with your own list. This is not really terribly relevant for the exam, but I just want to show you that it's a long process where you're evaluating things like infrastructure, process, performance, people, the 3 Ps, what I call it, and then you pick the funds. Operations are important. The proverbial thing, what if you get hit by a bus? What if there's a damage to the building? You want to make sure there's remote recovery, disaster recovery. A lot of small startups and hedge fund hotel may not have this. So there's a lot of questions that will be asked before you're sending a check to a private company. There's been very little to minimal fraud in like mutual funds or ETFs. That's very highly regulated and segregation of assets. While if you're sending your money to Madoff or Elizabeth Holmes or whoever your favorite fraudster is, it's a lot easier to scam somebody with private funds. Also adding to your movie list, there was the Madoff documentary on Netflix. This one was more of a documentary. There was a movie with Robert De Niro, I think, as well. So why I mention that is that Madoff's accountant, nobody knew who it was, and Madoff was the only client. You'd expect that somebody managing tens of billions of dollars would have PwC or somebody doing the audit. In addition, the service providers themselves do a check on the person. So you're getting a double or triple layer of, analysis or security. You're typically doing a background check. You can do an online check for like $50, but you can hire a company like Kroll for like $10,000. And they'll talk to people that know the person, that work with the person who are on the ground. And these are among the things that they'll look at. Right, these last two slides are, I think, relevant. Whenever you see a list, it's good material for like an exam type question. If you're not familiar with the term red flag, it just gives you reason to be cautious. Doesn't say I'd never do it, but just don't jump in. So as an example, a short-term track record, somebody that has a short-term track record, they're not necessarily a fraud. They can just be starting their fund. It's just that you don't want to go overboard, investing in that fund. As an example, let's say there was a top trader from Goldman Sachs and she spun out and started her own hedge fund. You could legitimately say, well, are the returns that you generated at Goldman because of Goldman's resources or because of your skill set? So it takes time to determine skill versus luck. So we never invested in Madoff, my company. And one of the reasons is that Madoff printed his own financial statements. That's called self-clearing. You want a reputable third party printing financial statements saying your account is worth this, third party administrator. Short-term track record. So short-term, rough rule of thumb is that people in the industry want to see a 3-year track record. I like to see how you do in both a bull and bear market. Some managers stray away from their core competence, more likely to kind of fall apart a little bit. Not necessarily. We talked about Citadel that did okay. Very common question, what percentage of your net worth is in the fund? Most managers will answer that question if they think you're serious about investing. Some managers will give you a sample trade or two. Some manager will give you nothing. Some manager will give you complete transparency. Almost anyone that runs more than 100 million has to be an RIA. Some don't. And you'd have to question why they don't do that. If a lot of people are leaving the firm, that raises some issues as well. Maybe there's something wrong and people don't want to be a whistleblower. We talked about the low quality service providers. Part of the background check you would uncover is if somebody closed down a prior fund because of poor performance. And if they did that specifically to avoid, overcoming that high watermark, that would be borderline, unethical. Last but not least, we've seen the fact that these men and women are making tons of money. So if you're paying them a lot, they should be responsive in terms of service. And that's the last of our lectures in the course. Happy to answer any questions. Otherwise, we'll kind of move on to the project discussion. No time for bull and bear tonight, so we'll wind up in 5 minutes and just wind up early. So I'm sort of optimistic that they might call off the strike by Sunday night because I know they're working full time, but I have no idea. But, I think it's better for your teaching for me to be in the class. And I don't think there's actual picketing right in our building, and especially there's no picketing at night. But, if you're really uncomfortable about going to class next week, I will have the Zoom thing, but I'm going to be physically in the class and we're doing the presentations. I'll let you work it out about a hybrid presentation where some people are remote and some people are in the classroom. But absolutely, full stop, we're going to be in the classroom for the final exam. There's no online exam, except for the one person that spoke to me earlier in the semester with a health issue that I can't discuss for HIPAA reasons. All right, so these are the projects that were emailed to me. I'm pretty sure there's one or two more. I mean, I didn't check my email up to the second. So let me just look over here. Are there any companies on the list that somebody on the call, is part of?
Yeah,
okay.
I sent you over a JP Morgan one.
Okay, JP Morgan.
Let me see here.
Okay, so
534.
Oh yeah, Rocco sent me that. Okay. All right. Any other teams? We're going to determine the order. It's not going to be a big deal because everybody's going next week. Just want to pause. Is there any other teams that are not shown here? All right, so let's kind of recap the presentation. As I said, I'll let you work it out if some of your people will be physically in the classroom and some will be hybrid. Ballpark, 15 minutes, plan on 20 minutes max presentation. It'll largely be, I'll call it a graphical cut and paste from your written report that you just handed in. And you're basically making a stock pitch. Other than myself and the people on your team, hopefully, nobody else will have read your report. So, I personally know of L3Harris and Leotis. They're both defense companies, but I'm guessing most of the people in the class don't know them. So you're pretty much going to go over the sequence of your report. Here's my company. Here's what it does. Here are the products. Here's something on the history. Here are the key players. Here's the industry. Here's the financials. Here's the valuation risks. But, you're not going to make it all, small font text that people will zone out. So the more visual, graphical you can make it, probably the easier it is on the eyes. As I discussed last week, I'm going to hand back your reports next week with a grade. And there'll be one grade on the report. In my mind, about 90% of the grade is on the written report because that took more time than a 15-minute presentation. So in my mind, a strong presentation, I'll move it up a few points. When it's not so strong, I'll move it down a few points. But it's not going to have a huge impact on your grade, so I wouldn't stress about it. The presentation, let's call it 15 plus minutes. And then there'll be, let's call it 5 minutes of Q&A. I'll ask you a couple of questions. Maybe people in the audience will have a couple of questions. I've been doing this 20 years, and the easiest way to do it, at least since we've had the internet, is to email yourself your presentation, and you'll just go up and use the instructor workstation. If there's some type of really cool graphical thing, you need to use your computer, your Mac, you can plug it into the investor workstation, but it's easy just to send a PowerPoint or PDF, email it to yourself, and we'll just walk up to the instructor workstation. So that's sort of what I wanted to say. We have 5 presentations, and I'll just ask you we'll go in the order, and I'll ask you just to type the name of your company in the chat window. So who wants to go first? You can just type your name in the chat window, and that's how we'll timestamp it.
Sir, we'd go first. If you want me to type, I can. For Leidos, our group could go.
Okay, so Leidos.
Sure.
That's fine. Okay. Who wants to go second? Just the company name, please. Okay, I see something in the chat there.
L3Harris will take second.
L3, I'm not sure so you want to go in the middle, Rocco? All right, so L3.
Yeah.
So Rocco, or you want to go, JP Morgan wants to go third?
Yep. Thank you.
All right, so we got 2 left. Pepsi will go fourth, I guess. And then we got Verizon. I'll put this, not that this is terribly complicated, but I know sometimes people are coming from work and whatever. I'll put this in the chat window. You can kind of copy and paste this. maybe I'll also send an email in Canvas while we're waiting. But that's pretty much, what I wanted to say. Happy to answer any questions. Anecdotally, the evidence I have is that maybe half the courses are online, half are face-to-face right now, and half have been canceled. Is that sort of accurate, or are most of your classes online? Any feedback of what's been happening this week?
The other class that I am in, which I know a couple of the other students in our class here are also in, just canceled completely.
Okay. So, yeah, I'm kind of straddling the line, but I think it's best for your education to continue. And I think, you're like my number one customer, so I'm not terribly worried about it. But if you have some, ethical concerns or whatever, you can log in remotely. If you have strong concerns, it's okay if your group kind of picks it up. I'm really hoping things will be settled by the final, but, there's no option to take the exam remotely. And, like I said, I'm sort of just watching on the sidelines, and there's a lot of pressure the governor is putting on and contributing some money. So my estimate is that they might call off the strike by Sunday, but let's see how it shakes out. But I plan on being there, and you can make your own decision whether you want to be there or be virtual. And let's hope it'll all be settled for the final. Any questions or comments before we depart?
So, sir, we'll go over the final, exam prep.
Yeah, I'm
next
going to do it's called a review, and we'll also talk about Investopedia, a few minutes on that. We'll have time, because let's just ballpark estimate 20 minutes each. It's like an hour and 40 minutes, and we have 3 hours, including the break. So we'll have ample time to talk about the final exam and other things as well.
Okay, sounds good.
Yeah. Any other questions before we head out? All right. Thanks for joining us. Hopefully next week we'll go smooth in person. I don't think there'll be any picket lines at night, but you can make your own choice, and I'll do the Zoom, but I'll be physically in the classroom. Have a good evening, everyone.